This is the market video for the week of May 11th, 2015. My name is Michael Saul, also known as Tiny. I've been away for a few weeks. I didn't go anywhere. I just haven't been doing videos because the market has been consolidating, and it's still consolidating, but I think we're getting ready to see a move here. So I decided to do a video this week. And of course, you can always catch me on Sundays with my partner Paul Schatz for the market strategy session. I'll leave the link below where you could sign up. It is free to come and ask your questions and hear what we have to say. So I sent out an article to my list, and you could get on that list by signing up at paulandsaul.com about an article I read in Zero Hedge that said the Dow has been in the longest consolidation in 105 years. And they based it on 30-day highs and lows. And it's legitimate. Okay, I mean, however they're figuring out the consolidation is fine. The point is, we have been sideways for a long time, and it makes it extremely frustrating. And I hear it in the emails and from my students, my coaching students I talk to. They're very aggravated at what the market is doing. And I say, look, take a step back. There's no need to be aggravated, because while it's a pain in the neck now to perhaps use a top-down approach, go to the indexes first and then the sectors and then the stocks for swings, you could still find stocks that are moving intraday, or you could even go to smaller time frames like 60 or 30-minute charts and see opportunity. But the reason that you really shouldn't be aggravated is that consolidations like this, they lead to big moves eventually. Now, I don't know how many days or weeks or months there are in an eventually, but since the dawn of time, periods of consolidation have led to periods of expansion and vice versa. So I think a move is coming. I would love to tell you a direction. I have an opinion on what direction it's going to be, but my opinion is absolutely worthless. The market is in the biggest consolidation, or at least the Dow is in the biggest consolidation in 105 freaking years. Let the market tip its hand. Stop trying to put your opinions on things. Let them, we're above the moving averages. We're right near all-time highs. It has to go up. Oh, we're overbought. We can't go up any higher. It has to go down. That's ridiculous. The market does not have to do anything, but rest assured, it will do something. So get on board, and also be careful for fake outs. Maybe it breaks one way before it swipes the other way. But I just love the super gurus, especially that coming out, oh, well, this is obvious that we're declining, or, oh, you saw this 2-day pullback, more to come. It's like, are you kidding me? We're in a range. We're not going anywhere. This is what is supposed to happen, things like this. Oh, we had a failed breakout here. No, we didn't. We came up to the upper part of the range, and we rejected. Okay, if you're familiar with auction market theory, okay, there are two ways that a market can move. And I'm not talking direction, okay? Those two ways are periods of extension or periods of rotation. Right now, we are in a rotation market. Okay, that means that it's a range. It's a way to trade this is to trade the range. And you can see the ranges are getting smaller here. That's why I think a move is coming sooner than later. But what you want to do is you want to go through the indexes and draw lines. I have a trend line fetish. I love to draw trend lines. But, for here, you could draw diagonal lines and stuff, but I think horizontal lines are the best things to do here. So I still think we're going to 212.97 at a minimum. Okay, if we do break out to the upside and it holds, then we are looking at a minimum of a measured move on this box, which would be, I'm going to use this high, 212.24 down to 204. So it's a little bit more than 8 points. So that would bring this to a minimum of about, 220 and change. Okay, that is the box measurement. If it does break out to the upside, same deal if it breaks to the downside. You're looking at about 8 points down to 198. Which is right around here, which is right around, this is probably the measured move down to here, which is right where previous support is. Okay, that's just using box measurements. All right, now that's the S&P. Here's the Dow, and you can see just in a consolidation here. NASDAQ, okay, was leading for a while, but it's lagging a little bit now. It's still overall, it's not in a perfect sideways consolidation like you see the other two, but it's still in a consolidation. Okay, it's not moving here. You can see actually it's in a rising consolidation, which is supposed to be a little bit more bullish. All right, so here's the Russell. Yeah, Russell's lagging now. Was leading for a little bit, but now it's lagging. It's under the short-term moving averages. It's far from bearish. It held the lows here. And again, you could draw some lines on that too. And you got the mid-caps acting better than the Russell, still lagging a little bit. So the market is not in technical trouble here. Okay, it still looks like it's ready to go higher, but again, you gotta wait for the breakout, and you gotta wait for that breakout to stick. Let's go through some indexes quick. Banks look okay. They're getting their footing behind them. Last time I did a video, I believe I talked about how the financials were lagging. They're starting to get a little oomph behind them. Love this setup here, not because I like Bank of America personally or any of that stuff. I just like that it's right on its 200-day moving average right here, and it's coiling up here. So it's easy to set your stops. Not saying it's easy to trade, but you know, if you're looking to buy a breakout, you know, your stop should be right under here, or you can even get more aggressive, put your stop right under the 200-day moving average. If it breaks down, then you could put your stop on the other side. It's up to you. I'm just saying that's why I like these types of setups. Here's JP Morgan, very strong, nice, acting well. Citigroup looks like it's coiling up for a move. I'd really be watching these financials. Look, we have sell in May and go away. Everybody's pounding their fist. It's May. Oh, the market's overbought. Oh, it has to pull back. Well, what happens if it doesn't? You know, if the market doesn't pull back, okay, then, I mean, you could get a lot of bears in pain, like these super gurus that continue to try to call market tops. But, I mean, I love this pattern in Citigroup. I have no idea if it's going to break and stick. I have no idea. Okay, all I love is the pattern. We still have to wait for it to break out. But, I mean, if we get some upside move, I'd be watching this Citigroup. I'd be watching Bank of America. Okay, I mean, Citigroup could target this high up here. And yeah, it's not like a Google or an Amazon or an Apple that can lurch 30 or 40 points. So what? All right, it would still be a nice solid move if it were to get up to these highs at a minimum. But, of course, it has to break and stick. All it is a pattern right now. But if we do break out in the market, definitely something to look at. All right, it's almost 8 minutes here, so let's keep going. Bank of New York looking nice. Northern Trust looking nice. Zion even looking nice. Okay, broke out above the 200-day moving average. Now consolidating here. A lot of financials are looking okay here. Broker-dealer consolidating, looking all right. Goldman, looks like that wants to go back to those highs at a minimum. Morgan, all right, we drew this in a little while ago, and it's just been creeping up. It's not a huge gain, but it's steadily grinding higher. Okay, looking good. How about like a Leg Mason? Sorry about that. Okay, Leg Mason is lagging here. So if this decides to catch up, watch to see if it can get over the 50-day moving average. Let's look at the semiconductors. They're lagging a little bit here, but you can kind of form I don't really like this low. I like the top trend line. I don't really like the low trend line, but doesn't matter. See if it can break and go. Let's look at some semi stocks. Clat Tanker, Lagamundo under the moving averages. Maxim lagging. Intel, they're lagging. Got to get over that 200-day moving average. So it's probably, here's NVIDIA. Let's look at ADI. Yeah, not too bad. ADI is showing some okay relative strength. All right, how about like an MU? Not really looking great. So the semiconductors definitely weighing on the NASDAQ here. All right, let's look at some other NASDAQ stocks, some of the high flyers. Amazon, big push, big gap up, now pull back. Will it resume and continue higher? Let's see. Google, yeah, sloppy here. Google, I don't have a clear picture on Google. Apple, also consolidating. It popped up, and then it came back based on the watch and all the whatever. The watch, there was some problems with the watch. That's why my friend said he would never buy the Apple Watch right now, because he never buys the first generation anything that Apple puts out. Always waits for the next one or the next two. So that's why he didn't buy the watch. But he says he's probably going to buy it. I don't know. All right, Priceline. I like it too, so I'm not ragging against it. Price sign looks a little sloppy right now. Netflix, yeah, Netflix looks like it wants to go higher. This is a nice pattern here. See if it can break out, and of course, stick. Oh boy, I missed that one. Sorry, rack space. Okay, there's rack space right here. Looks like it's in a beautiful bull flag. Again, I don't want to fight the market, so if the market doesn't get on the bounce or start moving higher, but yeah, rack space, I mean, this is a gorgeous bull flag. Again, you have to wait for confirmation, and of course, check for earnings. Make sure you're not stepping in front of a steamroller or something, because earnings is a pure gamble. Now, bonds, they broke down. They didn't get back up to retest the highs here. They broke through the 200-day moving average. So on this test back up, got to watch to see if it's the kiss goodbye. In other words, if it holds as resistance, this may be a good shorting opportunity for bonds. Let's see. Gold is sideways, nothing to say here. Silver is sideways. I mean, a little bit nicer of a coil. So if you're a short-term silver trader, you can watch for a break here or a breakdown here. Let's look at crude oil. Crude oil, I mean, I thought crude oil was going much lower. Right now, it may be bottoming out here. I don't know. I still think there's lower prices to be seen, but I've said it time and again, price equals time. So after a big move like this, I was expecting a big consolidation. I mean, I think we could have a while to go, and I think it could consolidate some more. Wheat could be going lower here. Soybeans, sideways. Corn looks lower. Sugar, yeah, maybe a little bottoming pattern here. Let's see if it can pop up off of this. Coffee, yeah, still lower. It's got to do some work here if it's going to put in a bottom. So, let's do some currencies. Almost forgot. I always get the email. Don't forget the currencies, please. All right, so Euro is back to the breakdown point here. So this is key resistance. But if it can get above here, it may head back to that 200-day moving average. Paul and I still believe the euro has lower prices to be seen, and those are independent opinions. We didn't get together and say, hey, let's say the euro's going lower. We both think it's going lower. All right, here's the dollar yen. This looks like it's going higher, but look at this consolidation. Talk about a long consolidation here. Here's the monthly. You can even go to a monthly chart to view this, right? You can skip the weekly, go from daily right to monthly. Of course, you got to wait for the breakout, right? Always got to wait for the breakout. So let's wrap this up here. Consolidating here, it is absolutely, I'm going to use this word that you should never use, but I'm using it. It is absolutely stupid to try to predict which way we are going here, okay? Your opinion, it's great to have. I have a lot of opinions. You still need the evidence backed up by the market. If we do break out, watch those financials. I pointed out some banks. Of course, got to wait for them to break out too. They don't have to break out with the market, but stuff like this Citigroup is a gorgeous pattern. This Bank of America is a gorgeous, right at the 200-day moving average. Okay, and what I like about these is you know where to put your stops. That's why I like the patterns more than anything. They're not high flyers, they're not big movers, but they can be consistent. They can move consistently and get nice gains relative to their price. So those are what I'd be looking at here. There's some other ones that we went over as well. Right, look at this rack space and a beautiful bull flag. So just keep your eye on these. Wait for the market to break, and more importantly, wait for it to stick. Join Paul and I for our weekly market strategy session. You'll get a lot out of it. We go over the indexes, the sectors, everything I go over here, but in much more detail. Paul talks about timing and why he's bullish and bearish, and then I answer all your questions. You come with them, and I'll answer them about the market, or Paul answers them about the market, and I do individual stocks or currencies or futures, whatever you got. All right? I'll see you there. It is Sunday, May 10th at 8 p.m. Eastern. It is free to attend. The link will be below. Join the email list at paulandsaul.com. I don't send a lot of emails to that list, but when I do, they're pretty valuable. At least that's what I get from the feedback. I'm usually quoting other articles, or I'll say something about the market. All right? I will talk to everybody soon. And thanks again for all the emails asking where I was. I am back. Everything's great. I'm going to try to get back to a weekly schedule. But I got to tell you, if we continue to chop around like this, All right, well, then I may take another week or so off. But if not, and we're finally starting to move, which I think is going to happen sooner than later. But of course, let the market tell us I'm right. You'll see me back every week. Okay? Talk to you soon. You can always get in contact with me, tiny@paulandsaul.com or tiny@stockmarkettrendx.com. Talk to you soon.